For Canadian couples, life insurance isn't just about protecting individuals, it's about safeguarding the financial future you're building together. Whether you're newly married, cohabiting, raising a family, or planning for retirement, selecting the right life insurance policy is a crucial step in ensuring your shared goals and dreams can continue, even if one of you is no longer there. Today, we're going to explore the various life insurance options specifically for couples in Canada, helping you understand which type might be the best fit for your unique partnership. Why life insurance is essential for couples. As a couple, your lives are intertwined, often financially. You might share a mortgage, joint bank accounts, car loans, or be planning for significant future expenses like a child's education or a comfortable retirement. If one partner were to pass away unexpectedly, the surviving partner would face not only immense grief, but also the sudden burden of sole financial responsibility. Life insurance provides a tax-free lump sum that can replace lost income. If one partner is the primary earner, the death benefit can replace their income, allowing the surviving partner to maintain their lifestyle and cover ongoing expenses. Pay off shared debts. A major concern for many couples is the mortgage. Life insurance can ensure the mortgage is paid off, allowing the surviving partner to keep their home. Fund future goals. Whether it's saving for retirement, a child's education, or a dream vacation, the death benefit can ensure these shared aspirations remain within reach. Cover final expenses. Funeral costs and estate administration can be significant. Insurance can cover these immediate expenses, easing the burden on the surviving partner. Estate planning. For couples with substantial assets, life insurance can be a strategic tool for managing potential capital gains taxes at death, ensuring wealth is transferred efficiently to heirs. Now let's look at the main types of life insurance for couples in Canada. Option 1. Individual life insurance policies for each partner. This is often the most recommended approach for many couples. Instead of a single policy covering both of you, each partner purchases their own separate life insurance policy. How it works. Each person applies for and owns their own policy. You can choose different coverage amounts, different policy types, term or permanent, and different terms if desired. If one partner passes away, their beneficiaries receive the death benefit from their policy, and the other partner's policy remains in force. Why it works for couples. Flexibility. This is the biggest advantage. You can tailor each policy to individual needs. For instance, if one partner earns significantly more, they might need a larger coverage amount. If one partner prefers term insurance for specific debt coverage, while the other desires permanent coverage for estate planning, individual policies allow this. Separate coverage. If one partner passes away, the surviving partner still has their own coverage in place. This is crucial as their financial needs and responsibilities might change significantly after a loss. Divorce, separation. While not pleasant to consider, individual policies are much simpler to manage in the event of a relationship breakdown. Each person retains ownership of their own policy. Future insurability. If one partner develops health issues, their individual policy is unaffected and the other partner's policy remains valid. If a first-to-die joint policy had been in place, the survivor might face challenges getting new coverage at a higher cost. Considerations. It can sometimes be slightly more expensive than a joint policy because you're essentially buying two separate contracts, each with its own administrative costs. However, the added flexibility and ongoing coverage often outweigh this minor cost difference. Option 2. Joint life insurance policies. Joint life insurance covers two people under a single policy. While it might seem simpler or more cost-effective up front, it comes with important distinctions, primarily related to when the payout occurs. There are two main types: joint first to die and joint last to die. A. Joint first to die policy. How it works. This policy pays out the death benefit upon the first death of the two insured individuals. Once the payout is made, the policy typically ends, and the surviving partner is left without coverage. Why it works for couples. Immediate financial relief. The primary benefit is providing immediate funds to the surviving partner. This can be critical for covering shared debts like a mortgage, daily living expenses, or childcare costs, especially if the deceased was a primary income earner. Potentially lower cost. Because the policy only pays out once, it can sometimes be more affordable than buying two individual policies with similar coverage amounts, particularly if there's a significant age or health difference where one partner would be much more expensive to insure individually. Considerations. No coverage for survivor. The biggest drawback is that the surviving partner loses coverage after the first death. They would then need to apply for a new policy, which will be more expensive due to their older age and potentially changed health status. Inflexibility. If your financial needs evolve differently as a couple, this single payout structure might become less suitable. Divorce separation, splitting a joint. First to die policy in the event of separation can be very complicated and often requires canceling the policy and buying new individual ones, which could be costly. B. Joint last to die policy or survivorship life insurance. How it works. This policy pays out the death benefit only upon the second death of the two insured individuals. Both partners must pass away before the beneficiaries receive the payout. Why it works for couples. Estate planning. This is the primary use for joint last to die policies. It's an excellent tool for ensuring that funds are available to cover potential capital gains taxes that become due upon the death of the second spouse, e.g., on a vacation property or investment portfolio. Leaving a legacy. It's ideal for couples who want to leave a substantial inheritance to their children, grandchildren, or a charity after both have passed away. Lower premiums. Because the payout is deferred until the second death, the premiums for this type of policy are typically lower than two individual permanent policies with similar coverage amounts. Considerations. No payout for surviving partner. The surviving partner receives no direct financial benefit from the policy during their lifetime. If they face financial hardship after the first death, this policy offers no immediate help. Not for income replacement. This policy is not suitable for income replacement or debt coverage for the surviving spouse. Long-term strategy. It's a very specific tool for long-term estate planning and should be considered as part of a broader financial strategy. Choosing the best fit for your Canadian couple. To determine the best insurance type for you and your partner, consider these questions. What are your shared financial responsibilities? Right now, do you have a large mortgage or other significant joint debts? Are you relying on both incomes to maintain your lifestyle? Are you planning for or currently raising children? If the answer to these is yes, individual term policies or a joint first-to-die term policy are likely the most appropriate to provide immediate financial protection. What are your long-term financial goals as a couple? Do you want to ensure funds are available to cover potential estate taxes or leave a significant inheritance to future generations? Are you looking for a policy that can accumulate cash value you might access later? If these are key considerations, individual permanent policies or a joint last-to-die permanent policy could be valuable. What's your budget? Term policies are generally more affordable initially, allowing for higher coverage at a lower cost. Permanent policies have higher upfront premiums, but offer lifelong coverage and cash value. How important is flexibility and control? Individual policies offer maximum flexibility to tailor coverage and manage policies separately. Joint policies are less flexible once in place. A blended approach. The latter for couples. Often, the most effective strategy for couples in Canada is a combination of different policy types, sometimes referred to as laddering. Large-term policies for immediate needs. You might each get a substantial term life insurance policy, e.g., 20 or 25 years, to cover your mortgage, childcare expenses, and income replacement during your peak earning and family-raising years. This provides significant protection when your financial obligations are highest. Smaller permanent policies for lifelong needs. Complement this with a smaller individual permanent policy for each of you, or a joint last-to-die policy. This can cover final expenses, potential estate taxes, or ensure a legacy for your loved ones, regardless of when you pass away. This laddering approach allows you to address both your short to medium-term financial vulnerabilities and your long-term estate planning goals in a cost-effective manner. Important advice for Canadian couples. Be honest about your health. Both partners' health and lifestyle will impact premiums. Be transparent during the application process. Name beneficiaries carefully. Ensure your beneficiary designations are clear and up to date, reflecting your current wishes. This is especially important for blended families. Review your policy regularly. Life for a couple changes constantly. Getting married, buying a home, having children, career changes, retirement. Your insurance needs will evolve. Make it a habit to review your policies every few years or after significant life events. Consult a licensed insurance advisor. This is paramount. A good Canadian insurance professional can assess your unique financial situation, discuss your shared goals, compare options from various insurers, and help you structure a plan that provides the optimal protection and peace of mind for both of you. Choosing the right life insurance as a couple is an act of love and responsible financial planning. It ensures that no matter what life brings, your partner, your family, and your shared dreams are protected.